Assalamu alaikum everyone. I hope you guys can hear me, right? Am I audible? Can you guys hear me? Thank you, Yasir, for the feedback. Thank you, Hassan. Thanks, Lucky Angel. Okay, so as discussed in last class, today's class and every such class will be divided into two parts. The first portion of the class would be your queries relating to the weekly topic, and second phase would be the exam kit element. So let me first focus on the first part at the moment, then we'll start on the second part. I have opened up the annotated capital gains PDF in front of me. If you guys have any kind of question from any page of capital gains, most welcome. Any query from capital gains, I do recall one or two guys reached out to me like, sir, this point is not clear, this is not clear. So please do raise it to me. If in my opinion, wherever the things are explainable on text or on voice note, I tried my best to explain, but still where I personally believe that the things are in benefit of larger audience. So I kept that to discuss it right now. But obviously that should come from you guys, the students. That sir, please clarify this, repeat this type of stuff. So floor is all open for you guys to ask the questions. Page 44. Page 44. This is page 44 of the PDF? Yes. Yep. This statement is future disposal of assets. Got it. So in this, on page 44, on this particular line which you are asking, the point of discussion is we are discussing the implications of BADR with other reliefs, right? So for example, there is quite possible that in a given situation, your BADR related relief conditions for BADR relief is met, and your any other deferral relief conditions are also met. Let's say gift relief, let's say rollover relief, let's say incorporation relief, let's say paper for paper exchange relief is met, right? Deferral relief do not saves the tax. Deferral relief always defers the tax. Whereas BADR, it actually saves the tax because your tax rate is going to be lower, right? So what should we do? If today I'm meeting conditions of deferral and BADR, which relief should I go for? So I illustrated one example where I was like, what will be total CGT with incorporation relief? And what will be total CGT without incorporation relief? So I am like, without incorporation relief, taxes lower. So there will be a tax saving if I do not go for incorporation relief, right? How would I know what is beneficial to go with the deferral relief is beneficial or not? How would I know? So answer to this thing is, if future disposal of asset, like in this example, the future disposal of asset means the future disposal of these shares, future disposal of asset. If future disposal of asset do not qualify for BADR, so the future shares disposal do not qualify for BADR, because they would not be meeting any of the condition of BADR. So BADR has three main conditions with respect to shares. 5% above, employee, and holding duration should be. So let's say I'm going to sell out my shares in 1.5 years time. Let's say I will not be employed in that company. Anything could be. So if I'm not meeting any future disposal will not qualify for BADR. So in such situation, and your current disposal qualifies for it, then it is beneficial to disapply incorporation relief. And this is what we discussed over here as well in this example. So in this example, two instances, I really don't know whether you recall the scenario or not. I do. If a person claims gift holdover relief, Delroy didn't get any capital gain, son capital gain, but tax at. But if they do not claim that gift holdover relief, then Delroy will be taxed at 10%. Why Delroy will be taxed at 10%? Because Delroy is employee. He has holding of more than 5%, holding duration more than 2 years. Whereas his son Grant do not meet any of the conditions. Hence, there is a tax saving if we disapply or we do not go for the deferral relief, because the principle remains same. The future disposal do not qualify for BADR. Why do not qualify? Because Grant was not an employee. Because Grant not an employee. Any one condition would work. Grant was not an employee. Delroy is an employee. So if disposal by Delroy and he wants to claim BADR, yes, he can claim. But Grant, can he claim BADR? The answer is no. So future disposal do not qualify in such, whereas your current disposal qualifies for BADR. In such situation, uh, it is beneficial to disapply deferral relief and claim BADR now. But keep remember, strategy would be pay less, but today. Right? You are paying less amount of tax, but you have to pay today. Or alternate strategy would be pay more, but like you are not going to pay tax today. It will be taxed tomorrow, but would be with the higher amount. So what you are prepared for, pay less, but today, or pay more, but later. And that's a very good, thank you for asking this. That's very important to have this conversation. This is one of the very important area of ATX. Fahad Zaki, Minhaj, and please, I request to everyone online, please send message to everyone rather than directly to me. Page 50, a small part disposal of land and building. So, Fahad, what's your confusion? Do please let me know your exact confusion. Yasser Sohail, yes, I'm not very much sure, very honestly. I checked out with the photocopier uncle about the availability of the notes. I'm not sure. Notes available at photocopy?
Yeah, but you have to inform them directly.
Exactly. So like you need to pre-inform them like a day or two, so that they can take a print of that for you guys. But it is available with them. So one student sitting in the class, he acknowledged that it is available, but obviously it's not readily available. It's like you need to inform them a day before at least, then you can collect. Fahad Zaki, how the relief works and the effects of election. So how the relief works, a small part disposal. So my first point with respect to small part disposal, land and building is, if you ever make a part disposal, you need to compute the gain and cost will be calculated by the concept of cost of part sold formula, right? But if you go for the election of small part disposal, then the effect or consequence will be there will be no part disposal at that time, means no need to calculate any time, no need to perform any type of calculation. The gain would be deferred under the remainder part. How the gain will be deferred, we'll discuss. No need to pay immediate tax. How the relief works? The gain would be deferred. How the gain would be deferred? By deducting proceeds received on part disposal from original cost of asset. So what you are doing is you are reducing your cost of asset If you are reducing your cost of asset, as a result, your future gains will be higher, future tax will be higher. And any such things which you are not paying today on the cost of your future, that is always basically the concept of your deferral relief. You are deferring your tax. The base cost of part retained is reduced and future gain on disposal would be higher. And this principle is consistent across gift holdover relief, rollover relief, insurance relief, all such deferral reliefs, where you have the concept of base cost reduced, future gains would be higher. Page 46, Minhaj, I'm looking at your comment, page 46. Most welcome, Fahad. Minhaj, I'm at, so one thing, a confusion for me is, it is page 46 of the booklet or of the PDF. So the booklet and the PDF pages are a bit different. So if I look for page 46, so this is page 46. Okay, paper for paper exchange. Fair enough. I hope you're talking about this one, Minhaj. Yes, my friend. What's the question? And by the way, guys, if you want to ask the questions, you can unmute yourself and ask the questions. So it's not necessary that you only type your questions. Okay. So I do recall, Manhaj, you raised this question at WhatsApp as well. So answer to this piece is, keep remember and try to understand this thing. Like for Mr. A has shares of Y company and he's exchanging shares with the Z company, right? Company Y shares is a separate asset. Company Z shares is a separate asset. These two are separate assets, right? If I'm giving shares of company Y and receiving shares of company Z, isn't it like I'm exchanging the asset? If I'm exchanging the asset, exchange is a chargeable transfer, referring to the first lecture of the capital gains, where chargeable asset, chargeable transfer, chargeable person. Chargeable transfer, gift of asset, exchange of asset, sale of asset, market value less than market value. But exchange of asset was also a chargeable transfer. So exchange is a chargeable transfer. Now, I am giving shares of company Y and receiving the shares of company Z. So what will be the so ideally it's a disposal proceed. I should be recording one share is going out, one asset is going out, another asset is coming in, another asset would be recorded as an asset, and outgoing asset would be recorded as a disposal, as a gain. Due to by default paper for paper exchange, we do not calculate tax at time of exchange, but paper for paper can be disapplied as well. Okay, and here we are referring to exactly to that disapplication, that you should disapply paper for paper exchange. And if you disapply paper for paper exchange, then at time of exchange you need to pay the tax. The disposal proceed would be the consideration received from company Z, and this is what I did. The consideration received from company Z is like 160. So I would so if you look, I recorded disposal proceed by 160. Cost is my cost. Differential is gain. CGT at the rate 10%. Then if I paid the tax, I didn't go for paper exchange. Then for me, the cost of ordinary shares remains its market value and the cost of preference shares remains its market value. So there will be no allocation of cost like we did over here. Minhaj, on your comment, Z is not recording disposal. Disposal is recorded by Mr. A. Part one is company Y shares, separate asset, company Z shares, separate asset. So this disposal is on disposal of company Y shares. And this is now I get the company Z shares, the implications of company Z shares on me. Right? Minhaj, I hope clear. Yes, any further question? So, if there are very few questions, that gives me a inner happiness, inner peace, like recordings are of good quality, that you guys didn't face any as such difficulty. You guys are pretty much comfortable. That is the optimistic view. Realistic view is, sir, we didn't give so much care. So, in the meanwhile, until you guys ask the question, Fahad, Hassan Shahid, Lucky Angel, Minhaj, Simran, Yasir Sohail, can you guys please update me on the progress of your recordings? I request the response of everyone. So there are 6 students online. Please do respond me. What's your status? Are you guys done? If not, how many lectures you guys are done? So, Yasir, you started. Okay. Minhaj done. Simran done with CGT. Good. Fahad, that's nice. Hassan Shahid, good. Who's left? I guess Lucky Angel, you left. What about you two guys? You are done with
It's the half.
just a half recording. So let's say 4 lectures. One recording remaining. Oh, got the access on Friday. So if you got the access on Friday and 2 recordings left, that's great. Seriously. But again, so I understand for this week there was some issue with respect to access, with respect to stale lectures. I really don't know why was that, but that was the issue. So I understand for this week, but please, I request all of you guys from next week onwards, do align yourself because look, those who are not done with the recordings yet, probably, at least I can tell, for the starting half class, it would not be completely beneficial for you. And for rest of the half class where I am planning to solve the questions, I really don't know whether the question would be beneficial for you or not, because if question belongs to the area whose recording you have covered, it's fine then. Otherwise, you will not be able to understand what we are discussing. So that's the thing. So if there is any further question from capital gains tax notes, no. Any question till 4 recordings, half of the recordings? Not yet. Uh, Fahad, Hassan Shahid, Lucky Angel, Minhaj, Simran, Yasir, Sohail. Any question till yet? Uh, Simran noted. Let me move towards there. Yeah. So Simran, I'm at negligible value claim. Yes. What's the confusion? This assumptions, assumption one, assumption two. Okay. So keep one thing remember that negligible value claim is not your actual disposal. So it is something which is hypothetical we are doing. So what is negligible value claim? The concept of negligible value claim arises if your asset becomes nil or approximately nil value. Okay. In this situation, what you can do is a person can make an election, means you are documenting an assumption under which it is assumed that asset is sold today at its market value and realizes a capital loss. Not necessarily you sold the asset actually. Means it is quite possible. You know, do you understand the concept of unrealized income or unrealized loss? Unrealized income is, for example, the revaluation surplus is your unrealized income. There is an income, but you not realized it. In the similar way, the concept of unrealized loss. Unrealized loss is, for example, the impairment loss. The asset value is down, but you are, it's not realized loss, it's unrealized loss. I can see the decline in market value, but it's not actual cash flow terms of loss, right? In tax authorities, there is no concept of unrealized. It's always realized income, realized losses. But over here, what tax authorities are advising me to do is, what I can do is, I can convert my unrealized loss assumption wise into realized loss, and realize a capital loss today. Then it is further assumed that asset is reacquired at its today's market value. Means two assumptions involved over here. The assumption number one, I disposed of the asset today at today's market value. Today's market value would always be nil. That's why, or approximately nil. That's why we are claiming negligible value claim. Whatever was the cost of asset, equivalent to cost of asset, there will be loss, right? That is assumption. So it's like rather than actually disposing of the asset, you make a claim that assumed this asset is disposed of. That's why the word is deemed DP over here, assumed disposal proceed. And you are realizing a capital loss. Then assumption number two, you reacquired the asset at today's market value. So today's market value is nil. So you acquired the asset at today's market value. Then let's say in future, if asset value goes bit up, let's say in case of shares, the share price start going up, you disposed of the asset, right? So net position remains same, but only benefit of this assumption is rather than actually selling and waiting for long time to realize the capital loss via NVC, you can realize the future loss today. Is this clear, Simran? Perfect, thank you. Fahad Zaki, in which market value used for apportionment? I have confusion in market value at time of first disposal. So Fahad Zaki, I can tell, probably you are talking about paper for paper exchange, and for paper exchange, I was like, in the paper for paper exchange, which market value should we use for apportionment? Should it be at time of exchange or should it be at time of first disposal, right? So if the company is quoted company, so quoted company, ideally the philosophy is the quoted company market values are readily and always available. So if you are making a disposal of if the acquirer company is quoted company, then you should take the market value at time of exchange. But if the acquirer company is unquoted company, then we should take market value at time of first disposal. First disposal means if you are going, whenever you will dispose of the exchanged shares, you should take that time market value of shares. Now let me head towards page 37. Probably this has to be precise your question. Thank you. Any further question? Yasir Hassan, Fahad Zaki. Hush, paper for paper exchange, loan note type things. I am at paper for paper exchange loan note type thing. So what's the question, Minhaj? Paper for paper in one word. Uh, Probably loan notes you are referring over here. So, okay, let me tell with respect to paper for paper. So with respect to share for share, if I'm giving share, receiving share, it is paper for paper. At time of exchange, no tax. Whenever I will dispose of the exchange shares, there will be tax on exchange shares. If it is shares for cash, the cash portion is taxed immediately. If it is shares for loan note, if it is shares for loan notes, it means I will be receiving the loan notes. Then important thing is disposal of loan notes are exempt from capital gains because loan notes, if three conditions met, which I have mentioned over here, issued by company, redemption in cash, denominated in local currency, then in such situation, sorry, then in such situation, disposal of loan notes are exempt from tax, right? But let's say in this situation, I'm selling out the loan notes for 25. So, would there be any capital gain implication? The answer is yes, because I surrendered the shares and I received the loan. I give the shares, receive the loan. So that is basically the disposal of shares. That is not basically the disposal of loan notes. So to that extent, where you give shares, receive loan notes, to that extent, there will be capital gain computation. But whatever is the movement in market value from this value, what is this value? The value on which you receive the loan notes. Whatever is the plus minus as compared to this value, there will be no tax, neither positive nor negative. There will be no capital gain implication. So this is basically the the gain on exchange of shares versus loan notes, which is taxable. And when it will be taxable? At time of disposal of loan notes. I used a lot of words, Minhaj. No more question? No more question? Okay. So I have already opened up my exam kit, my means ATX exam kit as well. And like I requested to you guys in the last class, please do not attempt exam kit at your own. If you want, let's say, capital gains further practice questions, you should refer to the textbook. Do not start the exam kit. Do not open the exam kit because in the exam kit, the first area capital taxes, there are approximately 8 to 9 questions in the capital taxes. But I can tell in all of these 8 to 9 questions, none of the questions solely belongs to capital gains. All of the questions at bare minimum belongs to capital gains inheritance. Plus, it can include some further other topics as well, but not less than these two topics. At the moment, the question which I have decided or which is in my mind to pursue with you guys is question 42, LIBOR examined in December 2018, page 120. Here I am. Probably not a good question, but still asking. Do you guys have the exam kit? PDF? Online ones, those who have the exam kit, it's fine. Otherwise, you guys can follow the screen, or the exam kit is also available at your Dropbox. So you guys can pick the exam kit from there as well. Okay. Is it readable now? Okay. So let's start with the question. LIBOR. You should assume that today's date is 1st September 25. By the way, before I start the exam kit question, guys, I'm probably putting one caveat with respect to the recorded lectures. Look, please, being human, try to understand one point. When me as a teacher, as a tutor teaching in class, being human, I can also make mistakes, right? If you guys are there in the class, you guys always point out, look, sir, there is a casting error. Shouldn't it be in this way? You explained in this way, but what you explained, what you are writing are different. So it can be input error, it can be mathematics casting error. So there is a quite possibility that you will observe any such type in the recordings in the notes. Possible. I'm not saying that it's always, no, it is possible that it exists. So if you find any kind of inconsistency with respect to numericals, with respect to concept, please do raise it. I really don't mind discussing it. And if it's an error on my end, I will acknowledge it. Otherwise, if not an error on my end, probably your concept will be rectified. Probably then you will be looking in a different way. But please do raise such concerns if any you face in the calculation or casting type of stuff. Okay. You should assume that today's date is 1st September 25. LIBOR and his sister, Vesta, have requested advice on the timing of the sale of shares acquired by LIBOR in recent company takeover and the capital gains tax and inheritance tax consequent of Vesta making lifetime gift rather than leaving an asset in her estate upon her death. Okay. LIBOR is UK resident and domicile. Fine. LIBOR is UK resident and domicile, has taxable income of 30,000 each year. The word is taxable income of 30,000 each year. Means every year his 7,700 of basic rate band would be available. Right? For CGT, yes. LIBOR acquisition of ordinary shares in Mercury PLC. LIBOR purchased 800 ordinary shares in Vulcan Limited for 40,000 on 1st July 2020. Mercury PLC acquired 100% of the ordinary share capital of Vulcan Limited on 1st June 2025. Mercury Limited acquired 100% of the ordinary share capital of V Limited on 1st June 25. So probably it sounds to me the concept of paper for paper exchange. In exchange for one ordinary share in Vulcan Limited, LIBOR received the following. Four ordinary shares in Mercury PLC valued at 20 per share immediately after takeover and 7.5 cash. Mercury PLC has 200,000 issued ordinary shares. Okay. LIBOR has never been a director or employee of either V Limited or MPLC. So why LIBOR is not that? You know, There is a silent message in this statement. Good. So no concept of BADR for any of the companies. So no BADR for V Limited, no BADR for MPLC, right? The takeover was for the bona fide commercial reasons and not found for the tax avoidance purposes. Minhaj, that's a very good point. Investor relief. What about investor relief? Not an employee of the company. Why not investor relief? So I understand no BADR because not an employee. My question is why no investor relief? I'm asking. V Limited looks to be unquoted company because according to my general knowledge of legal structure, PLC refers public limited company. Which is quoted. And LTD means this is my default understanding. So V Limited, so I can think of it to be unquoted company, right? And what are the conditions? So public limited company issue answered, addressed, and no. Is it the Ramzan Roza effect? So I do recall there were many students who are like, sir, we are done with the recording. It doesn't. There was 3-year condition, very good. He purchased the shares on 1st July. Let me convert it into this way. He purchased the shares on 1st July 20. If the exchange is after 1st July 23, it would be more than 3 years. If before 1st July 23, it would be after 5 years. So if I look, this transaction happened on 1st June 25. So the 3 years time gap is there. So guys, with respect to investor relief, for shares to qualify for investor relief, it should be unquoted trading company. So I can establish it to be unquoted, but is it mentioned about trading, not trading? No. First. Second, for investor relief, you should have bought the new shares via subscription. So is it new shares which I bought or is it something old shares? I really don't know. Since there are a lot of unknowns, that's why I'm not thinking about investor relief. Otherwise, the condition that you guys referred, so for example, it should be quoted, it should be unquoted. I can establish it's unquoted. It's like more than 3 years. Yes, I can see it's more than 3 years. Should not be an employee. I can see the person is not an employee. So till yet the conditions looks to be met. But there are two major ambiguities. One is about the nature of the business of the company. And second one is about whether I purchase the shares new via subscription or not. LIBOR proposed transactions in Mercury PLC shares. LIBOR now wishes to sell all of its shares in Mercury PLC. All of his shares in Mercury PLC. He has received an offer from an unconnected person to purchase these shares on 1st January 26 at a price of 28 per share. Leiber would prefer to sell the shares to his nephew Janus. However, this would delay the sale as his nephew will not have the necessary funds to purchase the shares until 1st May 26. What difference does it make if he make a disposal on this date and if he make a disposal on this date? By the way, one important thing which I missed. Janu said that he will also pay 28 per share. So there is, let's say, delay of 4 months in the sale, but there will be no change in the disposal proceed. There will be no change in the selling price, right? If no change in selling price, then what will be the consequence of delaying the sale? It's not changing at the moment. So he received an offer for 28 per share. Alternatively, he can sell it to his nephew on 1st May 26, and he said he will also pay 28 per share. Any impact, any consequence? One important impact, one important consequence is if good one, Minhaj. If sold on 1st January 26, the disposal would fall under fiscal year 25-26. And if sold on 1st May 26, the disposal of asset would fall in this year separate CGT, this year separate CGT. And since that takeover already happened in the same fiscal year, availability of annual exemption, right? And second important thing is timing to pay that tax. Vesta is 66 years old and has never married or had a civil partner, is in ill health and is expected to die at some time within the tax year 26-27, has made no disposals for capital gains tax purpose in the tax year 25-26 to date and will not make any in the tax year 26-27. Has made a previous one lifetime gift of 350 cash to her son Janus on 1st June 2025. Vesta owns an investment property which has never been used as a private residence. The current market value of the property is less than the price Vesta paid for it, and its value is expected to fall further throughout the tax year. Vesta is considering in her lifetime rather than leaving it to him in her estate on that. Janus is the sole beneficiary. Okay. Two requirements. You should assume that today's date is 1st September 25. Explain with supporting calculations the capital gains tax implications for LIBOR of takeover of V Limited by Mercury PLC on 1st June 25. And the subsequent sale of his Mercury PLC shares on 1st January 2026. Explain with supporting calculations why it would be beneficial for LIBOR to sell his Mercury PLC shares on 1st May 26 instead on 1st January 2026. And here the word is both things. Explain. Nothing to calculate. Simply explain. Capital gain calculation. Explain with supporting calculation. So at the moment, I'm not going to explain more, rather I will be calculating more. That's question 42. Can I have the roughly sketch from your side? Not advice, a roughly calculation. Just give me two. Okay. LIBOR has V limited shares. How many V limited shares? 800. And he purchased these 800 shares for amount of V limited was acquired by Mercury PLC, and Mercury PLC offered 4 ordinary shares and 7.5 cash. So if LIBOR accepted this offer, then he would get 800 multiplied by 4 per share. So like he would be getting 3,200 shares, and cash he would be getting 800 multiplied by 7.5. Is it like 6,000? 5,600. 6,000? Confirm. 6,000. So 800 multiplied by 7.5, right? What was the market value of Mercury PLC share at time of exchange? as a result, for ordinary shares, the market value becomes 3,200 into 20. It's like 64,000. The cash market value remains same, so cash doesn't have any sort of market value. As a result, total consideration which he received, which LIBOR received, is of 70,000, right? Then 64 divided by 70,000 multiplied by original cost. Original cost is like 6,000 divided by 70,000 multiplied by this fraction amounts.
Six, five,
36,571. 3,429, I guess. Yasir, I hope that would be fine. You want to look above this MPLC thing. Do you want to look above this MPLC? Thank you. This is paper for paper. Since it is paper for paper, hence there will be no immediate tax. But this is it's paper for cash exchange. It will be taxed. Disposal proceed 6,000. Cost 2,571. Did they make any other disposals? UK resident, taxable income, bona fide, LIBOR now wishes to sell all of his shares to fine. Is there anything mentioned in the question about other disposal of assets? I didn't find any. So if nothing mentioned, then you can put any of the assumption like annual exemption already used, annual exemption not used. So I'm assuming, I have no grounds to say why I'm assuming this, but I'm assuming that annual exemption is already used. Right? I have no grounds to say this, but for the sake of simplicity, I'm assuming it. When this exchange thing happened on 1st June 25. Means it is something which was happened in 25-26. Since annual exemption already used, remember, we checked how much basic rate band is available. We checked that, right? How much basic rate band was available? That was 7,700, right? So since this is within 7,700, so 2,571 would be taxed at the rate. But paper for paper exchange. Paper for paper exchange. This is fiscal year. Paper for paper exchange. The disposal proceed would be 28 per share, 3,200 number of shares we had, right? And this working, we are performing this working on 1st June. No, 1st January 26. Disposal proceed 2,800 shares multiplied by, sorry, 3,200 shares multiplied by 28 per share.
200.
3,200. So it's like I surrendered my V Limited shares and I received Mercury PLC shares. So how much Mercury PLC shares I received? 3,200. So 28 multiplied by 3,200 is minus 36571. 029. Assumption continues. Then
So what if the accumulated hasn't been used?
if my assumption is other way around, already been used, then this would be covered by the annual exemption. Okay. this amount of gain would be covered by the annual exemption of 3,000, right? Some annual exemption would be available for this because I can see this amount is less than 3,000. So here annual exemption, let's say 3,000 minus 2,571. So 429 of annual exemption deducted from here. Then rest of the, then gains to the extent of 7,700 at the rate 10% exceed 20%. But since I have assumed no annual exemption available, so I am like, I directly applied 10% over here to the extent of basic rate, but basic rate is still left. 7,700 was available for gains. Out of this 7,700, 2,571 used over here. So how much basic rate is still available? 7,700 minus 2,571. Then 5,129 at the rate 10%, make it 513. Forty-seven 900, I guess. Five three zero two nine minus 5,129
47,000.
into 20%. Five one three plus 9580. Minhaj, if my assumption is other way around, like annual exemption is not used, then the answer is yes, 429 would have been deducted. The annual exemption of 429 would have been deducted from here, right? If there is any, sorry, if there is any confusion, what I can do is I can assume it, I can make assumption other way around as well. So let me solve it assumption other way around as well. Gain 2,571 less annual exemption. It was taxable gains amount 5 to On these taxable gains, CGT to the extent of 7,700 at the rate that works out to be 52,600 minus 7,700, which is covered under basic rate, 900. I'm done with part A. I solved part A with two assumptions, one annual exemption used, one annual exemption not used. Is there anything which is not clear in part A? A1. Not covered paper for paper exchange. Anyone who is not clear with any point till yet? Minhaj, yes, and that's why the requirement was explain with supporting calculations. So I'm not explaining, I'm purely calculating, but so just to give a sense that you guys really understand the working, what is going on. Now, part A2. Explain with supporting calculations why it would be beneficial. Why? So one impact tax here would be changed, right? So let me do it. I'm solving A2 with above two assumptions. First assumption is okay. For cash part, gains on cash part amounts 2571. Annual exemption is already used. So capital gains tax at the rate this remains same. And this CGT at 10% is as of fiscal year 25. But for other gains, which are 53029. By the way, just to give you a reference, there will be no change in gain. Why there will be no change in gain? Because there is no change in DP, there is no change in cost, so the gain would remain the same, right? Now, this disposal is on 1st May 26, right? 1st May 26 means this gain now is not of 25-26. This gain would now belong to fiscal year. I hope that's clear, right? 26-27. Then 53,
9066.
sorry, 53029. 53029 minus 7,700 into 20%. Do have a look. Previously, this was 10093. So just by delaying 4 months, I will be managed to save the tax of 257.
The reason for this tax saving.
The reason for this tax saving 257 is, to be precise, previously, if disposal was on 1st January, look, there is no doubt on this thing. So this remains in 25-26. So previously, of 7,700, this was covered by basic rate, and then basic rate, and then high rate. Now, this is in basic rate, complete, finished. Fiscal year end. The income 30,000 every year. So it means every year 7,700 of basic rate band would be available. As a result, this amount reduced. So effectively, my tax saving is 2,571 into. Okay. Now, if I make assumption annual exemption is available, then what will be the consequence? My cash gains were 2,571. Taxable gains then, so CGT would also be nil. Five three zero two nine. Annual exemption. Then up to the extent of 7,700 at basic rate, and whatever amount exceeds from basic rate,
सर आपने ये एग्जेम्पशन 3000 क्यों यूज किया है?
sorry.
सर आपने ये एनुअल एग्जेम्पशन जो है वो पूरी 3000 क्यों यूज किया है?
Oh, is
2571
it?
यहाँ
No. So here we are doing part B, right? So this annual exemption is of fiscal year 26-27. So please keep mindful that now this all working is for fiscal year 25-26, and this working is for 26-27. That's why
ओके सर
I'm taking annual exemption again of complete 3,000.
ओके ओके
9236. And if I look, it was
5.
Important thing is, if question is silent, you can keep any of the assumption. Annual exemption used, annual exemption not used. Whatever assumption you assume, be consistent. And second thing I will advise is document your assumption. Document your assumption means do mention that it is assumed that annual exemption is used, annual exemption is not used. Like I was mentioning, annual exemption is available, annual exemption is not available. Okay. By the way, we are done with part A of the requirement. Since part B of the requirement advise Vesta whether or not there are any capital gains or inheritance tax advantages for herself or Janus if she were to give the investment property at Janus on 31st December 25 rather than leaving it to him by state on death. So this is something which belongs to inheritance tax as well in addition to capital gain. And since inheritance is not our today's agenda, this week agenda, so that's why I'm not going to touch base this part over here right now. But what I will request you guys, by next Saturday, once you are done with IHT as well, do attempt part B of this requirement at your own. We will discuss this part B as well in the next class. Minhaj, all of this working is for A2. And for A2, the point was if Leiber make a sell of shares to his nephew on 1st May 26 for similar disposal proceeds, what will be the consequences? So I was like, the important consequence would be there will be change in fiscal year. So if change in fiscal year, so one non-financial factor is you will get more time to pay the tax, non-tax benefit, but there are some itself tax benefits as well, which we discussed over here. Like this is the tax save, and this is the tax save if we delay the disposal. Just a second. Would it work, Minhaj? Yes, this part only. So, Minhaj, while answering part A1, I keep one assumption that annual exemption is already used, right? So I need to apply my assumption consistently. So first, I assume that if my annual exemption is used, I put this assumption over here. But based on, discussion for the sake of practice, I redo this question where the assumption is annual exemption is not used. So I deducted annual exemption. Then I solved part A2 under both assumptions. One is annual exemption is used and one annual exemption is available. Okay. Anything further? Not from my side. No. So see you guys, inshallah, on next Saturday. So I'm not sure. Whatever will be the case, I will update you guys in the group. My understanding is next Saturday TSA would be off. If TSA would be off, then we will keep our class online. Okay. And if TSA available, we'll keep the class in the similar way, like today, hybrid version. Okay. Whatever will be the case, I'll update. So there is no point to think that there will be no class on Saturday. So class will be on Saturday, inshallah, as per Ramzan schedule, I would say. Or we can discuss the time, because Ramzan is bit of a, disturbed in terms of routine. So that's why we will discuss that time for Saturday. Saturday class, yes, no is not an option. It will be. We can discuss time with. We can discuss how it will be conducted. It will be online or it will be hybrid. This is what we can discuss. But please, next week, inheritance tax, all should be done. Okay. Perfect. So thank you very much, guys. I hope it would be benefit for you guys. I tried my best. Okay. So see you guys inshallah on next Saturday. Take care. Allah Hafiz.